India's latest official economic growth figures are out. The economy grew at 4.7% in the December quarter, in line with analyst expectations. It's also slightly higher than the six-year low of 4.5% in the previous quarter.
And the growth can be attributed to a small rebound in rural demand, private consumption and government spending. The government has been looking for overall GDP growth of around 5% for the full financial year ending in March. And that would be its worst performance since the global financial crisis in 2008.
And for more, let's speak with Rebecca Bundan in Mumbai. Rebecca, the GDP growth has picked up in the third quarter. Is this a sure sign of recovery? Is there a noticeable improvement in consumption?
Well, actually, what's happened here is we saw a bit of excitement initially because this 4.7% figure came out for the quarter to the end of December, which suggested a slight pickup, as you say, on the data that came through for the previous quarter of 4.5%. But looking more closely at the figures, we see that the government has actually revised those figures for the September quarter to 5.1%. So this actually still represents a slowdown from that previous quarter with these revised figures that have come through. So that 4.7% is actually still very sluggish growth. If we look more closely at the numbers, we can see that manufacturing was down slightly, construction picked up very, very marginally. The private consumption numbers were quite strong at above 5%, but overall this figure is not really what India wants to be seeing at this point in time. It's really looking for numbers that are above 8% in order to create enough jobs for its population, to lift people out of poverty and to be becoming a $5 trillion economy by 2025, which is what the government is really aiming for. And now as well, there are all these concerns about the impact of the coronavirus on trade and tourism, and if we see what's happening globally as well, this is all something that's impacting India too.
Well, speaking of that, Q3 GDP a slight relief, and you mentioned that the coronavirus as well. How vulnerable is India to this?
India is very vulnerable in terms of trade and tourism in particular. This is something that the central bank has highlighted. Businesses are really starting to see an impact, particularly manufacturers in India. They're very dependent on imports that come in from China in terms of components, other products. India is very, very dependent on China in terms of non-oil imports, and those are all being affected at the moment. And as global trade, global tourism is affected, this is something that has a knock-on impact on India as well. So this is a very worrying development for the country, and with the next quarterly data, there's expected to be a significant impact on that. If we look at what's happened with stock markets in India as well, following global trends, there's been a huge impact on stocks in India, with the benchmark Bombay Stock Exchange Sensex today alone falling more than 3%, and it's seen its worst performance in a decade this week. And if we look at the GDP forecast for this year as a whole, it's expected to come in at 5% according to government estimates, and that's a decade low. So with these factors that are on the horizon, the risks from the coronavirus, India's economy is really not expected to pick up significantly anytime soon.
All right, thanks for that, Rebecca Bundan, with that update from Mumbai.